Most traders tell you that you need iron discipline and strong psychology to be successful in Forex. They are wrong. In this video, I'm going to be explaining to you why trying to master your psychology is an absolute waste of time. Trading psychology is overrated, and to be honest, it can never fully work as long as you're a human. Why? Because being human means having emotions. Fear, greed, impatience, frustration, revenge, these emotions are not a mistake. They are part of who you are. In fact, emotions are one of the things that make you a human. But trading success often feels like it requires the opposite. People tell you to remove emotions, stay disciplined, and trade like a machine. And if success in trading means removing your emotions, that simply means removing your humanity. You will have to become a robot, and that is impossible. You cannot completely eliminate emotions because emotions are built into you. So the goal should never to become emotionless. The goal is to create systems that help you trade correctly even when emotions are present. Instead of trying to stop being a human, use smart rules to bypass emotional decisions. That's why in this video, I'm going to be sharing with you 7 powerful tricks to help you bypass emotion and trade with more discipline. Mastering the master key. Patience. This is one skill that every trader should be able to master. Listen, let me explain to you why patience is very important. Assuming you are trading in a 1 hour time frame, for example, you're not expecting to catch just like one candle or two candles. You're expecting to catch a series of 1 hour candles, right? So that series of 1 hour candles, a candle will form within 1 hour. So you need to hold series of 1 hour candles. That simply means you're going to be holding 1 hour candle for how many hours, right? So that simply just requires a lot of patience because now you're not trading 1 hour time frame just to close within 1 hour. You're trading 1 hour time frame to probably close in like 2 days, 3 days, and so on, right? Patience is one skill that every trader should master. Not a strategy, not indicators, not even psychology. Patience. Because almost every trading problem comes with a lack of patience. Overtrading, that's impatience. Revenge trading, that's also impatience. FOMO entries, that's also impatience. Closing trades too early, also impatience. And breaking your rules, breaking your trading plan is also impatient because you cannot wait. So if you can master patience, you can master every single market. That's why they say the market is a redistribution place from the impatient traders to the patient traders. The patient traders get paid. The impatient traders pay the patient traders. So how do you build this patience? You know, the funny thing about being a patient trader is that you cannot really learn patience from watching a YouTube video. You build patience by practicing patience. It works like a domino effect. You do it once, it becomes easier again to do it the next time, then easier again, then it becomes part of your trading identity. For example, you cannot trade on the 5 minutes time frame every day, panic over every candle, and then suddenly expect yourself to hold the trade for 2 days. It doesn't work like that. First, you must prove to yourself that you can be a patient trader. Maybe today you hold the trade for few extra hours instead of closing early, then small wins build confidence. Over time, holding trades become easier, then easier again, and before long, patience become natural. Patience is not something you wait to have. Patience is something that you practice until it becomes who you are. The 10 trades rule. You see, I actually made a video about this 10 trades rule right here. You can watch the concept, but I'll give you an idea. The 10 trades rule, I learned that concept by Dax. One of the biggest mistakes traders make is becoming too emotionally attached to one single trade. They treat one loss like a failure and they treat one win like proof they have mastered trading, and both are dangerous. Because trading was never meant to be judged by one trade, it should be judged by a series of trades. This is what I call the 10 trade rule. The idea is simple. Stop focusing on the outcome of one individual trade and start thinking in batches. Think in 10 trades. The reason is simply because one trade means nothing. Even the best strategy in the world can lose today, and even a bad strategy can win today. One trade is too small to measure success. What matters is the bigger picture. If your strategy is tested, proven, and backed by data, then your job is not to predict the outcome of one trade. Your job is simply to execute the plan. That's one of the biggest difference between professional traders and beginners. Professional traders think in probabilities. Beginner traders think in single outcomes. So trust your edge, trust your data, and let the next entries tell the real story. Treat trading like an exam. Alright, let's call this guy Alex. He's a student, so he's about to take an exam. What does he do before he takes that exam? He studies, he revises, he checks resources, He prepares as much as possible, and that's where the real work happens. Coming to the exam day, he writes the exam based on what he has studied and then submits his papers. There is nothing to do after then. The only thing to do next is to wait for the final results. So, using this analogy, Alex being a student studying means that he's making analysis on his chart. You have the time. Take your time, break down the markets, look for certain patterns that you're looking for to take based on your strategy, based on your system. Writing the exam is you pressing buy or sell in the market. Then after you do this, after pressing buy or sell in the market, all you have to do is wait for the final result, just like you do as a student, which means you have to wait for the trade to hit TP or SL, final take profit or final stop loss. After entering a trade, most traders start panicking. They keep checking, they keep adjusting, they close profit too early, they move stop loss and let emotions take over. That's just unnecessary interference. After the exam, the student does not run into the lecturer's office every 5 minutes and be asking for results, maintaining the same risks every single time. Now, look at this picture right here. This picture will represent your trades every single time. It's always unequally distributed. You can never tell which trade is going to win or which trade is going to lose. You can never tell whether it's going to be a red day or it's going to be a green day. Sometimes you can have win streaks like this. Sometimes you can have losing streaks like this. Sometimes after a win, you can lose the next trade. Sometimes you don't even trade. Sometimes you have break-even trades just like this. One of the biggest ways traders destroy their psychology is by changing their risks too often. Today you risk 1%, tomorrow you risk 5%. After a loss, you increase loss size to make it back. After a win, you get overconfidence and you risk way too much. That is how account gets destroyed. Professional traders do the opposite. They keep the same risks every single trade. Your risk that you chose is 2%, for example. Your duty is to keep that same risk 2% every single trade. If the trade is not looking good enough, do not take it. If it's good enough, risk 2%. If you risk 2% on a trade with a 1:2 risk reward ratio, that means that your winners gave you 4%. If your next trade loses, you lose only 2% and you'll still be positive. But imagine doing the opposite. Risking 1% on your winning trade and then risking 5% on your losing trade. Now your account starts going backwards even with a good strategy. The problem is not your setup, the problem is your inconsistent risk. Another psychological hack is using a realistic risk reward ratio. A lot of traders think using a very high risk reward ratio always means better trading because high RR setups usually create more losses. Price gets close, then reverses, then hits stop loss. Now imagine seeing that over and over again. It will create frustration, it will create doubt, it creates overtrading. Sometimes a more realistic target like 1:2 risk reward ratio is stronger for your psychology. Because when you start seeing more wins build confidence, confidence builds consistency, consistency simply builds profitability. Protect your mind first, your profits will follow. Removing the ability for you to interfere. Listen, this is actually my favorite one and I use it all the time. Let me show you exactly how I do this. So I start by using alert. The moment I enter a trade, I already know my stop loss and I know my take profit. So I set my stop loss on MT5, then I set price targets on TradingView for both my stop loss zone and my take profit zone. Now I don't need to keep checking the market every single second. If price reaches either level, I get alerted. Then I make a calm decision. Do I secure profits? Do I let it run longer? Or did this trade simply hit stop loss? Simple, no panic, no emotional guessing. When you enter a trade, know where your power is, right? For me, I'm very good at analyzing the market on TradingView. I know how to be emotionally stable while looking at the market on TradingView. But on MT5, I cannot do that. Me seeing my balance going all the way to like $700 and then it's now reversing all the way to like $200 and even $25, that will start messing up in my psychology. And to be honest, you might make an emotional decision and just close the trade. It has happened to me severally. But the best way I try to solve this issue is not really trying to fight my own behavior. I just try to eliminate the problem totally, right? So on my phone, I do have this setting where you can stop certain apps from functioning over a given period of time. Once I open MT5 and I take the trade, I set my stop loss, right? I just close MT5 app and I just put it on timer for like 1 day or 2 days, right? Then I monitor the trade on TradingView because I can handle that one psychologically. So this is you realizing that the problem to your trading is yourself, right? So you need to protect yourself from yourself. Sometimes the best thing you can do is to make it harder to sabotage your own trade. Close the MT5 app. Use app restrictions on your phone if needed. Limit your access to MT5. Check all your trades on TradingView. Know what the trade update is. You can have an idea of what your profit could look like on TradingView. Because sometimes the problem isn't the market, the problem is you interfering way too much. Set the trade, set the alert, trust the plan, leave it alone. That is another trick. I use this one all the time. If you ask me this question, you say, please Zico, how were you able to master your psychology? I am battling not being patient in trading. Please, how do you conquer this? This is actually how I do this, right? I actually just stop myself from sabotaging my trades. I close MT5. That's what I do. Even if I'm mad on TradingView and I'm thinking that the market is going to reverse, there's nothing I can do. The MT5 app is closed. So that will just automatically force me to be patient on the trade. Smart people cannot be profitable traders.
All right, all right. So this right here is an uptrend. I'm looking for buys on this market as soon as I get the confirmation. All right there, confirmation. I'll be in on this market for buys, and my stop loss is going to be around this level right here. And because I'm so smart, I'm going to be targeting a very realistic 1:2 risk reward ratio. Let us see how this goes. We are in profit, ladies and gentlemen. All I gotta do is wait for the final result, bro. The market is trying to scare me. It's just a minor retracement. All right, market is now shifting structure to the downside. Oh my god, we are in the negative. So I'll just continue to wait. I think it's going to reverse.
All
It's
right.
going to reverse.
All right,
What's
all
going
right,
on?
all right. As a smart person I am, I'm gonna tell you what's going on here. The market structure is currently shifting bearish, and you can tell from the EMA that the market is
Not
now
good, not good.
bending over to the stop loss level. That shows that the market is going to be reversing. I'm going all the way to my stop loss. So for me to stay safe, for me to not lose in this market, all I have to do is take this trade right here at break even, which simply means I never lost anything, and we'll meet the market next time. I can explain. It's the market's fault. And this is not to insult smart people, but the truth is that smart people are actually overthinkers. Use data from your past trades, not smart to make decisions. That's why you are always profitable trading a demo account and even backtesting. You are always coming out positive because you are waiting for the final result, right? But once you are in a live market, you start making crazy interference and decisions which never helps your trading account. So if you're a smart person, at least be smart enough to know that 90% of what you do in trading is waiting. Waiting for the right setup, waiting for confirmation, waiting for the trade to play out. Avoid trading after a big win and after a big loss. Now the reason for this is actually pretty simple, and the reason you don't trade after a big win is because it builds overconfidence. Now you feel like you know what you're doing. You feel like you are the boss of the market. I am telling you right now, you are going to blow that profit that you just made. Even after a big loss, well, you are trying to now make your money back. There's always this pride that comes with I must be right, right? And that results in reverse trading, and you're still going to blow more of your account. Remember, you have to be patient. The market is a redistribution place from impatient traders to the patient traders. So if you're an impatient trader, just know this. You're in the market to dash your money to patient people. Trade with a checklist. Have a series of plan on exactly what you are going to do before entering a trade. Know what your strategy is about. Know exactly where you are going to enter. In fact, with the set and forget strategy, we actually do have an appropriate checklist where we check certain things on a trade to see them before we actually enter.